After the historical rally off of the April 7th lows and the great rally in May, is the market set up for a correction or a pause right now? We're going to dive into that in today's session, taking a deeper look at the DeMARK and Williams indicators. Before we jump into that, let's keep in mind that we did call for buying in May and highlighted that we were setting up for a great May to August period, calling for a sell in September. Really, if we stayed sideways the entire time for now, we would have one of the historically best 3-month periods. And that's why it's important for us right now to take a look at what the indicators are calling for, because right now, I still think we're on our way to a rally over the next 12 months, historically speaking. If we're up more than 5% in May, the return is over 20% over the next 12 months. But as traders, we may have an opportunity here to go short or lighten our positions. And keep in mind, this is for educational purposes only. All right, we're going to start off by taking a look at the S&P 500. Today, as we're recording this, we got the 9 sell confirm setup, which was the last piece I was waiting for with the current DeMARK settings. Right now, we're taking a look at sequential and the 13 exhaustion that you can see that we had just a few days ago. We got a sequential 13. And then today on Monday, we got the 9 sell setup perfected as well. Up here, you can see we have areas of resistance. You can look at whatever measures of resistance you want out there. There's just about every measure of resistance and retracement in the book is calling for a pause around these old highs. But the important piece I want to highlight is we got the 13 at sequential, but if we also take a look now and look at combo indicator, which is different than sequential. You can look at some of my past videos and know the difference between sequential and combo. The combo strict version just gave us a 13 last week as well. When we get these indicators, we expect either sideways to down movement over the next 12 bars. And now what we need to look for is confirmation that the uptrend is going to pause or reverse, and what areas can we expect? A first area of pullback that is very reasonable is right here at 583.24 in combo. But another thing I want to highlight is you can see here in the past that these 13s have been very good on combo. This version here is the most strict version. If we turn on the what they call 1B in this platform, you can see here that this has been very good at predicting tops and bottoms in the market as well. It nailed the bottom. It gave us a 13 back here. This 13 was actually accurate and confirmed because we had a sideways movement for 12 bars. But what I've been waiting for now is that next confirmation of sequential and this other combo we had in the background waiting to move. So you can see here that it is probably time buying exhaustion signals from DeMARK in the S&P 500 in combo and sequential on the S&P 500. But what about the Nasdaq 100? If we take a look at the QQQ on the next tab, you can see here that we have the sequential 13 as well. The 9 sell setup actually confirmed last Friday. And if I turn off sequential here, you can see when I turn on combo, the strict version is still working on a sell setup confirmation right here, right now in the Nasdaq. To get this, we need to move higher for the next couple days to get our 13 confirmed. If I turn on the less strict version, you can see that we had a 13 around that same time as well. We've gone through our 12 bars and we're starting to move a little higher. Areas of resistance right here as well in the QQQ. The important thing to highlight here is we are getting alignment across the indices. The S&P 500 is saying we're looking for a pause, not a huge pullback as I mentioned before, but we're definitely setting up for an area of consolidation right now based on the DeMARK indicators on the Nasdaq and the QQQ. An important thing I wanted to highlight as well is the last few weeks, the rally's really been done by the semiconductors. So if we take a look at the SMH, we are seeing a similar setup. Sequential 13 has hit. If I turn on combo, you'll see right now we're on a 12 today. So if we move just higher, as I'm highlighting, a little bit higher this week, we are going to get another 13 confirmed in the semiconductor index. And then one last thing, if we take a look at the software index, the IGV, you're going to see something similar here. I always love to find this alignment. IGV is a little bit for a couple more days behind, but you can see here a sequential 10. We turn on the combos. Boom. The less strict version of combo has a 13 right now. If we turn that off, we'll see here that we're still counting. It's back here actually at this 11. So if we get a couple of days higher again during this week, we're probably setting up for a pause heading into the rest of the month of June. But as everyone who watches my channel knows, I don't depend just on one indicator and one style of technicals. So let's take a look at what the Williams indicators are telling me and a few other things before we decide if June could be a sideways to down month. All right, I'm going to finish up today by highlighting some technical indicators from Larry Williams on the S&P 500 futures contract. I'm personally a futures trading, so this is where I spend most of my time looking at charts and trading. You can see here that we still have a very clear uptrend in place on the Williams %R with its trend of momentum. We're back into the overbought area today. But we can see here that LNL, which kind of highlights momentum a little bit better, did start turning over almost exactly with the first DeMARK Combo 13 that we just discussed on the earlier chart. If we dive into the commitments of trader report, this is where it starts to get a little bit more interesting. You can see here that the commercials were timing this current market move in the last couple moves basically perfectly. They started selling back here, hit their short level low just a few weeks before the market bottom, but they started buying at this point and they caught this big move. Who didn't catch the move higher in the rally? The professional traders. They missed most of this rally. They started covering their shorts a little, but they're still not heavily involved in the market, which means they could help push the market higher. But with the current setup and sentiment out there by the professional traders that we'll get into more later, I think we're setting up for consolidation and down moves based on this. But how are we doing from a valuation perspective? Well, the S&P 500 is currently overvalued against gold, the US dollar, and the US Treasury 30-year bond. When we get into this area where we have all three of these showing overvaluation, usually is an indicator for consolidation or a move lower. Now, for those of you that saw my video back in May, when we were calling for this historic move higher, one of the things I discussed was the seasonal tendencies of the S&P 500. And this is where it gets really interesting with all of these technical indicators lining up for a pause or a pullback right now in the market because it aligns perfectly with the seasonal indicators. It's Monday of this week. Right here, right now, this is when we expect the current rally to come to an end and have a slight pause. This is on the weekly chart. If we take a look at the daily chart, it is even clearer here that today, Monday, June 9th, was actually predicted ahead of time by the seasonals to be a market top. But as I discussed earlier, I think we probably have a couple more up days in there that's going to go out there and confirm a few more 13s in the software industry, the QQQ, and the semiconductors. And then we're going to start this decline, which calls for it to fall up until the end of June. Well, what else do we have going on in the month of June? We have trade negotiations going on, but we also, as many people know, have had the Trump big beautiful bill fight going on. And when has he wanted to have his bill passed? July 4th. When does the market usually start to rally again? Around the July 4th holiday. It's really weird timing, but it's crazy with these seasonal indicators, how news and events typically fall and give us a reason for, oh, why we had a rally at the end of June. So I'm just showing you now that the seasonal indicator is calling for a down to sideways market till the end of June. And the last piece, and I think this is one of the more important pieces to tell us of the current setup and buying momentum in the market, is if we take a look at the ProGo indicator. This last rally was very unusual because the people who did catch it was the public retail traders. We happened to catch the bottom of the market. The hedge funds missed it, but this is not typical. Usually the professional traders drive the market moves. And right now we have a major reverse divergence in the marketplace with the ProGo. You can see here that the pros came in and bought heavily here after missing some of it. But since then, really going back to mid-May, right around that first combo 13, the professional traders started lighting up again. But the market has continued to move higher, but their buying has moved lower. And the retail traders are actually the ones supporting the market right now near all-time highs. That's a red flag, folks. And you can see in the past, when we've had this divergence, it usually led to a market decline or sideways movement. So this is why, to recap, I still think we're going to have a historically strong next 3 months ending in September. But after such a strong move in May, it's just reasonable and technically correct right now to be looking for a pullback that's going to take us through the end of June, and expect that pullback to start probably towards the end of this week. Good luck with your trading. Let me know what you think in the comments, and I look forward to seeing you next time.